I'm delighted to be joined today by Matthew Dobbs, Fund Manager of the Asian Alpha Plus, which sits on the Chelsea Core Selection. Matthew, tell us why investors should be interested in buying Asian equities.
I believe Asian equities still remain a tremendous long-term opportunity for investors. Even if you look objectively at the underpinnings for Asian equity investment, I think there are a number of them. The first is simply numbers. I mean, you're talking about a region that comprises roughly a third, maybe 40% of the total global population. The second thing is the broad institutional strength. I mean, people read about Thailand problems or elections in India, but actually the basic institutional strengths of the region, it's a good place for capitalists to make money. They generally know the rules of the game, they have a good, generally pretty high quality workforce, they're creative, they're hungry, they want to get on. And that leads into really the third aspect of Asia as an investment opportunity, is just growth. I mean, I think the growth in Asia will remain 2 to 3% higher than the rest of the region. Obviously, you have to invest in companies who can then translate that into good earnings growth and good dividends and cash flows, and there are enough of them. It's a very big investment universe. So I think it remains an attractive area for people to put their money.
And why Schroder then for Asian equities? Tell us a little bit about the capability that Schroders have.
Well, in a way, the end of my previous answer was kind of leading us into that one. Because, I mean, the aspect of growth, I think, is important. You ask any businessman if they'd rather operate in a market that's growing 5% or contracting 5%, and it won't take them long to say the answer. Yeah. You know, we want 5% growth, thank you very much. But of course, the reason why businessmen are attracted to Asia is because it does grow fast, and therefore you do have quite a lot of competition. You know, capital can be quite cheap, it can get misallocated. So Schroders are really trying as active fund managers to course in a region of very diverse geographic exposures, very diverse economies, levels of development that are enormously different between, say, Singapore, one of the highest GDP per capita in the world, or India with a very low GDP, is finding good stocks, because good stocks are the only ones that are going to really translate into returns in Asia, because there are a lot of stocks which are run by people who are not that interested in shareholder returns or corporate governance. And I think Schroders have a brilliant infrastructure. I mean, I'm based in London, but I work very closely with our 20, 30 analysts based in the region who know the companies fantastically well. We've been in the region a long time. Schroders offices have been out there between 30 and 40 years of longevity. So I think our knowledge base and our disciplines as an active fund manager and the commitment to our own fundamental research to get the right stocks, I think we're probably one of the best people to run Asian equities for clients.
So sort of your experience with the great foot power that you have on the ground in the region, overlapping.
Yes, and I think we've got a very good bench of senior and experienced fund managers who have kind of seen it. You know, I've seen 2 bone-crunching crashes in Asia when I was out there in Singapore in the mid-80s and the late 90s. The experience of how Asia can change and the sort of corporate knowledge we have at Schroders and the analysts on the ground, putting together sensible portfolios in a disciplined way and run in companies run by good management with a focus on shareholders, I think should continue to, as it has in the past, to pay good dividends in relative performance for the portfolios we run in Asia.
Matthew, thank you very much.
Not at all.